Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back to Real Estate Radio. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the General Manager of HomeGain. Quick reminder, Real Estate Radio is designed to build the Washington, D.C. Metro's market by giving you good free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is the off-air number. It's 877-245-2030. That's 877-245-2030. or reach out via the web at realestateradio.dcmetro.com. Before we went to break, we were discussing the revamping of Obama's Making Home Affordable refinance program. And Louis, I'm glad you actually mentioned, because you actually thought that it was HAMP and not HARP. HAMP is the modification program.
Right.
Which this is actually the refinance program, where you're trying to, if somebody has a current loan and as long as they're on time, they're able to be considered as long as their mortgage is backed by Fannie Mae or Freddie Mac. If you missed it before we went to break, the details of whether you're eligible for this program are that your loan must be backed by Fannie Mae or Freddie Mac, and your current mortgage must have a securitization date prior to June 1st of 2009. Now, prior to the revamping of this, as of today, you couldn't go over 125% loan to value or of what the current market value of your home is. They've now changed that to where it's unlimited. It doesn't really matter what your house would appraise for. Now, I know you guys are probably going to have a lot of questions, and I'm going to go through some of the details here so you can get a better understanding of do you fall into this category? Because I know, Fannie Mae and Freddie Mac do have a very large percentage of the loans in the United States, and the 125% limit that was there hindered a lot of people from being eligible. Now it might open up the door for a lot more people. So I want to kind of be very thorough and explain this to you guys. So if you do fall in this category, you can reach out to me, and I'd be glad to look over your overall situation and see if you're a candidate for this program. It's 877-245-2030. Now, everything that I'm going to talk about today is accurate as of today, October 24th, 2011, and it includes the latest changes that were rolled out by the Federal Home Finance Agency as of today. So the first question that everybody's going to know, how do I know if I have a Fannie Mae or Freddie Mac mortgage? Well, they have lookup forms on their respective websites, so I would say check Fannie Mae's website first, because their market share is larger than Freddie Mac. But if there's no match there, then check Freddie Mac. Your loan must appear in one of these two sites to be eligible for HARP. So you have to check that first. That's the first step. So after you do that, then you basically have identified that you do have that mortgage, so you might be eligible. Another question is, if your mortgage is held by Fannie Mae or Freddie Mac, does that mean that I'm instantly eligible for the program? And it's not. There's obviously a series of criteria that you have to fit into, and that's just kind of like the pre-qualifier to see if you even have a chance at the program. And this is where it gets kind of crazy, Louis, because it's like, you would think that the program would be pretty clear cut. You have a Fannie Mae or Freddie Mac mortgage, and you're upside down. You should be eligible as long as you made your payments on time, right? You would think it would be pretty clear cut like that, but it's not, because you still have to credit qualify, you still have to income qualify, and you still have to be maintaining your payments from the time you took out the loan to now. You have to be current. You can't be late. This is not a foreclosure avoidance program, which there lies one of the biggest problems and issues that I have with this, is that you've identified that what about all the other people before that they change these guidelines as of today, that they had maybe a decrease in income, or somebody went through a divorce and now have a little bit less money, but they're still making their payments on time, so they're going to be punished because now they're not current. You know what I mean? So that's going to rule out a huge chunk of people, because they may have, qualified before. They're still making their payments on time, but now They ran up their debts because they had to use more of their credit cards, and they're not going to qualify income-wise.
But let's talk about the people who qualify. It sounds like it's just a subsidy for these people that are underwater in their homes that are paying their mortgage.
Yes, you have to be current. Um,
But what is the benefit there?
the benefit is that a lot of these people that took out these loans during that period of time are probably around 6% or so. Okay?
Sure, sure. But all you're doing is you're just changing their rate to make it more affordable. But I'm not sure that it's nothing more than a subsidy, that you're allowing them to take advantage of new loans.
Pretty much. That's pretty much what it is, because the modification program.
But it doesn't really prevent that. It just really puts more money in their pockets, because now they don't have to pay as much per month because they can get a lower rate on their interest.
Yeah, but there's a lot of people out there that, if you were able to change their interest rate by, let's call it 1.5%, that could be the difference between them going into foreclosure and not.
Right, right.
You know what I mean? And that's where I look at this program as, it could potentially save a lot of people who are considering, weighing their options as to what should I do? Should I, just let my house go back? Should I consider a short sale?
But you and I talked about this. Why is it that the banks won't entertain the lowering of the interest rate, and why do you need a government program to do this?
Because of the way that loans are securitized. They're basically bundled into, like hundreds or thousands of loans, and then they're securitized and sold on Wall Street. So you have a lot of these trusts. They're almost like trusts that are created that, hundreds or thousands of investors have bought into. And they have, contracts that say that they're supposed to be paid out a certain amount. So once you go changing that, and the lender would then have to, not only the lender, but the investors would have to agree on it, and there could be, hundreds of those. That's really where the problem is. It's not just the one guy gets to make the decision. You know what I mean? There's so many other parties involved that it would be very difficult to do this on a large scale. And unfortunately, without the government actually stepping in and saying that you're going to do these according to basically the same way that we want to do them, so that there's one way across the board, it won't work. It won't work. I think that the easiest thing to do is to step in and say, hey, if you're current on your home, if you're current on your mortgage, you should automatically be able to qualify for the going rates of right now. Who cares about the appraisal? It's really irrelevant. If you've been making your payment for 3 or 4 or 5 years, in good faith for you making those payments, I think that you should be eligible to refinance under the current interest rates. I mean, do you agree with that, Louis? I mean, I think that
other than the government having the mandate, it would make sense that if you're paying, you should be able to take advantage of the current interest rates.
Yeah, and I think that, honestly, this is one of the biggest reasons why people are having the decision of, what, nobody's trying to help me. Nobody's trying to help me. I'm working 2 or 3 jobs, and I'm barely able to keep up with my mortgage. I can't take, and I get probably 20 calls a week about people that, what do I do? I can't even take advantage of the 4% interest rates right now, and I'm at 6%. And unfortunately, what do I have to tell them? Well, there's unfortunately not a program right now that's going to help you. This home, basically the Making Home Affordable refinance program that I'm discussing right now helps the people that have Fannie Mae and Freddie Mac backed mortgages. So it is a pretty large percentage of the population, but yet I'd say still there's 50% of other people that don't have a mortgage backed by them. So, I mean, I think that it is a good thing because it's opened up a larger pool of people that might be eligible. However, as far as, the long-term benefits and the amount of people that are actually going to take advantage of this, I don't know. I don't think that it's going to be that many people.
And what happens to the others? They go under anyway. The ones that
yeah.
can't take advantage of this program.
Yeah, and that's what I'm saying. Like, how do you just have a cutoff date, and you say, oh, well, you can't be behind on your mortgage at all, because then you would fall into the HAMP, the modification program. You no longer fall into the refinance program. They just shift you from one program to the other.
Chances are the people that are making their payments the most at risk anyway?
That's a good question, Louis. I would say yes. I would say yes, because I think that there's a growing sentiment amongst Americans right now that this is really just it's purely a financial decision, kind of like if you were to own a stock or anything else. And when you really sit down and look at the numbers and look at what your debts and assets are, it can be very strategic. And I think that the longer time goes on without them coming up with a legitimate plan to help everybody and not trying to create these little small segments of groups of people, that you're going to have more people strategically default.
Ryan, who funds these loans?
The You're talking about the HARP and HAMP?
Yeah, when you're
taxpayers.
Right. So
Yep.
What happens if you refinance, you pay less, and then you go on under anyway?
Then basically it costs us more money. But here's what I think though, Lewis. I think that, and I'm just kind of, I think, speaking from a lot of the listeners that I've spoke to, that if the lender did something in good faith, like say, hey, I know you're at 6%, but I'm going to give you 4.25%, and that changed your payment by $300 or $400 a month, they're more inclined to keep paying that mortgage. Not only that, Lewis, you and I have sat here on this show week after week and discussed the benefits of locking in yourself at a low interest rate to protect yourself
Absolutely.
from future inflation. So this would be one of the biggest pluses for this program, is that you could lock in at low interest rates.
True. It definitely would make sense to take advantage. Anytime the government's handing out something, if you could benefit from it, like the first-time home buyer credit, it made sense to buy a house, you take advantage of it. But what I'm more concerned about is, obviously, the worst thing for a bank is if you're getting 6%, if you then have to go and only get 3%.
Right.
So if it's taxpayer subsidized, I think Freddie Mac and Fannie Mae have already been bailed out to the tunes of hundreds of billions of dollars. It seems like another subsidy to keep people in their homes.
Yeah, and unfortunately, Lewis, I agree with you there, but I think we're at the point where I'm not sure what's going to happen if we don't do it. I mean, this cycle, I think, could honestly continue.
Like the TARP proponents, Ryan.
What's that?
That's what we heard before TARP. If we don't do this, something bad's going to happen.
Well, no, but I'm saying that I don't think that this program is the end all. I think there should be one major overhaul of a program that basically says that everybody is grandfathered in, or can at least be considered for this program, and it doesn't have to be who your loan's with, whether it's with the government or a private lender.
But how can the government mandate what happens with a private lender?
Well, they should have had preconditions when they give out money. You know what I mean? Before they gave TARP, they could have set preconditions that said you must.
They could have, but they didn't.
And that's where I think the problem, without forcing the hand of the banks, this will never happen. And I think, honestly, that's why I think this problem will continue for the next 10 years.
Sure.
It's just going to keep recycling itself over and over and over again.
The banks are wards of the state, but it's more that they can control what benefits they're going to get from the government, rather than the government giving them money out with strings.
Yeah, I agree.
Attached.
When we come back, we'll jump more into that, Lewis, as well as what some of the other questions are regarding home affordable refinance program. You're listening to Real Estate Radio. I'll be right back.